Hello traders, my name is Gregor Horat and welcome to a new video update. In today's video we will take a look on dollar index, euro dollar, cable, oil and S&P 500. On a dollar index, as now we are tracking a huge triangle in wave B, which needs to be subdivided by 5 legs, but at the moment I'm focused more on this wave C, where if I'm correct, where the decline should be seen only in 3 legs. I suspect this was the first leg. We are already probably completed the second leg, and now we will be headed lower into a third leg of decline. On a daily chart, I suspect this was wave A, and this was our only 3 wave rise. We know that wave B is a corrective wave, so if my wave count is correct, then probably wave B already found the highs here, and we will see impulsive fall into wave C back below these September lows. Of course, this fall should then be structured by 5 legs. Okay, so I'm very bearish on US dollar index, and I suspect that this wave B already reached the highs here, simply because current fall is quite strong and it has personality of an impulsive weakness, which means that trend has changed and that this dollar index should be headed lower. In fact, on this dollar index weekly chart, I am observing a huge head and shoulders pattern. This was our left shoulder, our right shoulder, and this was a head. This is our neckline, and notice that the market came very close to this resistance level from the left shoulder, and this sharp fall on the weekly close basis in this past week suggests that this right shoulder may have already reached the top here and that we are headed lower. If I'm correct, then this fall should be significant, maybe even towards these levels around 75. However, I would not be looking towards 75 as long as the price is above the neckline, because as we know, only price can confirm a direction of a trend, and that means that I want to see a daily close price below this neckline. Okay. However, these short-term time frame charts suggest that we are headed lower. We spotted this ending diagonal in wave 5, and now this weakness on Friday was very strong, so I suspect it's an impulsive wave 3, headed a little bit lower at the start of next week, then a 3 wave bounce, and we will then continue to look lower. So if my interpretation is correct, then of course price should stay beneath this wave 2 swing high. And now let's take a look also on this technical weekly chart, where we can see that this 50 moving average reacted as a very nice resistance here. Okay, we made a slow pullback towards this 50 moving average, and now it seems that we are reversing lower. It appears to be a very similar situation compared to this price action back from just a second, back from actually at the end of 2010, in December 2010, when the market was trading beneath this 200 moving average, and then this 200 moving average turned into a resistance. At the same time, the RSI made a pullback into 50 to 60 area and then reverse lower. We have now a very similar situation. We are reversing lower from this 50 period moving average. Okay, and also RSI is between 50 and 60, so I think that all is matching perfectly now and is pointing towards lower US dollar, and at the same time it means higher euro dollar. Here we have the euro dollar weekly chart. As now we are tracking huge running triangle in wave B, and we anticipate a third leg higher into wave E. On a daily chart in our past video, we mentioned that this is only a free wave decline, so we suspect it's a wave B, a zigzag in wave B that would look for a support at this region around 1 to 6, 1 to 7. Okay, we can see a nice push higher from here, so I suspect that this free wave decline is finished and that market is headed into a new high of 2012. In fact, on this 4-hour chart we spotted this ending diagonal in wave 5. We know that ending diagonals are reversal patterns, so that was the main reason why I was looking higher. And notice this breakout that occurred this past week. We moved through this upper base channel resistance line, so it means that this market, this rally is very strong, and this breakout typically occurs in the middle of wave 3 of an impulsive structure. So I suspect this market is now in the middle of wave 3, which means that any pullbacks in next week will be probably only 4th waves before new leg higher will occur. Also, we moved well above and extended sharply higher after this falling trend line breakout, okay, which is also very important evidence for a change in trend. So I suspect this market is headed higher. Now we will also take a look on cable. On cable we also noted that this decline from September highs cannot be counted impulsively, so we labeled it as a corrective movement. We also noted that this price action is still trading within this trading channel, so choppy, we know that slow, choppy, overlapping price action within a trading channel is personality of a corrective movement, so we label this decline as a wave X, part of incomplete uptrend started back in June. So we believe that this market will again test highs from September. Okay, however, on the larger picture we can see that push higher could be final stages of a wave E. Possibly wave E could extend up towards 165, but definitely not above 167.40, otherwise my triangle count would be invalidated. Okay, here we have also this 4-hour chart where sharp close higher on Friday suggests that we are trading impulsively here, and I would be looking for more strength early next week while the market is trading above this swing low. Okay, so I would mark this as a short-term critical support. As long as we are above this level, I am bullish, but more importantly, I would be paying a very close attention to this falling trend line, which is a trend line from this September highs. Once we get a daily close above this trend line, then I will be even more confident that this market is headed higher. And now let's take a look on oil. I have received many emails regarding oil structure, and as you know, I am tracking this triangle in wave B simply because this price action for the past few months is clearly overlapping. Okay, it's sideways, it's trapped in the range, so I suspect this is only a temporary pause within incomplete free wave rally. If I'm correct, then in fact this triangle could be very near completion, simply because we already can count 5 flags in this triangle: wave A, wave B, wave C, wave D, and wave E. We could already call a potential wave E low here, especially if the US stock market will continue to rally and the US dollar will continue to fall. However, the price action on the daily chart is still quite unclear. Here's my daily chart where I can count 3 waves of decline in wave E. So yes, possibly the lows are low in here, but as I said, this structure to the upside is not confirming this low here yet. We know that we need an impulsive structure to the upside, and if you will take a look your lower time frames of this recovery, you will not be able to count 5 waves here. So I'm still a little bit more patient here. So for now my critical invalidation level remains at 77.37, which means that we could see still another push lower before this market moves to the upside. Okay, in fact I'm tracking this alternate scenario for crude oil, which suggests that this decline from $100 per barrel to this November lows was actually a 5-wave movement, a leading diagonal in wave A, and this slow choppy move could be a corrective wave B. So I would really not be surprised to see maybe another fast push into a new low, which means beneath this level, and then a reversal higher. Okay, if market will just continue higher, maybe even in impulsive sequence in weeks and days ahead, if other risk assets will remain in bullish mode, then of course I will go with this wave count, I will confirm this wave count then. But as I said, I need impulsive rise, possibly or ideally towards this 93.40 swing high from this wave B. Okay, so for now, yes, I'm bullish on crude oil, or I should say I expect break to the upside, but because this structure is not impulsive, I think that this wave E may still make another low, another push down before market will reverse higher. But this, in any case, this is our critical invalidation level. So as long as the market is trading above 77 level, I expect a push higher on crude oil. Now let's take a look on the S&P 500. On S&P 500 daily chart, we suspect that market is headed higher here within very complex upward movement. I'm tracking WXY, or a double zigzag here from October 2011 lows. This was our first zigzag, ABC, then wave X, which connects the second zigzag, which is now underway. We were also tracking this decline very closely for the past few weeks. We noted that this wave B may fall all the way towards 61.8% retracement area, which comes in around, or came in around 1340. Notice also that this wave B made a very similar pullback in points compared to this wave B. Okay, so I think this is a very significant now. It's looking very nice, especially because bounce from this zone is now looking quite strong and clearly impulsive. So this is my wave count on the 4-hour chart. I label this move as a double zigzag, ABCX, ABC, and notice that once we were able to count 5 waves of decline in wave C. I don't know if you remember, but when we were able to count 5 waves down in wave C, we noted that we should be ready for a reversal higher. In fact, this reversal is now very strong. We are already above this falling trend line. And also notice that market made an overlap with this wave A. This is very important. Why? Because in such case any bearish impulsive wave count was invalidated. If you perhaps were counting this move to the downside as a 1-2 wave 3, wave 4, and you maybe expected a wave 5 decline, then your wave count was now invalidated, because as you know, wave 4 must not trade into the territory of a wave 1. And because this rally is looking very sharp, impulsive, we closed on a daily and weekly basis above this trend line. I suspect that this market is headed higher. We could see a pullback in a free wave mode early next week. But again, this will be just a temporary movement that will look for a support at previous swing lows. So in either case, I think this market is headed higher, and I am bullish on this S&P 500 while I'm bearish on the US dollar. And here's also this weekly chart, notice that market reversed nicely higher from this what is this 50 period moving average, and also from this trendline support. So actually this price action looks very similar to this one back from June, from start of June, when the price bounced from this 50 period moving average, and now also is moving higher from this same moving average. So I suspect this market is headed into a new highs, okay, while the US dollar should move into new lows. Okay traders, this is it, and I will catch you on Monday. Have a good day. Bye.